Hi folks, Jason Dynison with some MyCPE shorts. I am on the road as I'm recording this in a hotel room in Orlando, Florida, but we've got some things to talk about. And so, here we go. Tax season is now over. And what did we learn from this past tax season? Well, a lot of the tax pros that I talked to in my own personal experience with this past tax season was that it wasn't so bad. It certainly was not the worst tax season that I've ever encountered. But one thing that stands out in my experience, and several other tax pros that I've talked to have mentioned this as well, is just how, everything is so compressed now. And in my experience, a lot of people sent partial information in earlier than usual. I mean, in January even, I was getting stuff from people who generally don't send their stuff until much later in tax season. But what was really happening was it was just partial information. And so then it's like, oh, wait, we're still waiting on this document and that document. And this and that document a lot of times don't arrive until sometime in March. So the real meat of tax season doesn't really get started until much later anymore. And along with that, there's really no such thing as a simple tax return. I don't think, at least not that we do as tax pros. And so I think that probably changes the nature of how we run our practices. What are we doing in our practices? Advisory services and things like that, and certainly figuring out how to navigate all of this complexity. And there's always curveballs. If you read articles like Accounting Today had a recent article about tax season and just how documents come in later and later, and it's partial information, and there's all these questions, and it's like, wait a minute, you did what? And everything grinds to a halt as you're trying to figure out what to do in certain situations with your clients. What are some other things that happened in tax season? I mean, there's complexity for everybody. There's no such thing as a simple tax return anymore, as we mentioned, but thinking ahead, what continuing education do you need in light of the fact that there's no such thing as an easy tax return anymore? Are you getting requests for trust and estate returns, or are there international issues popping up? You can turn those clients away, or maybe you can partner. What I've done on some international issues, I've partnered with a larger CPA firm that helps me with that. But also you educate yourself, and then you don't have to turn people away or outsource the work to a bigger firm to help you consult with you on things. You can do it. And technology, AI, I had a client that gave me all of their information along with an analysis that ChatGPT did of their tax situation and what their anticipated refund would be. And, we're going to see more of that, where people are going to be double checking our work with AI. So there's that side of things, and not to mention, how are we going to use AI? I don't even know the answer to that. I do use ChatGPT for some things, but I'm sure there's more that could be done. Some other news, the IRS has released the 2026 amounts for health savings account contributions. So this is way ahead of time on this, but for planning purposes, the annual limitation on HSA contributions for family coverage is $8,750. That's for 2026. So for next year, it's $8,550. this year. So it's going to go up $200 on January 1st of 2026. So what is eligibility for an HSA? It's a high deductible health plan, which means a deductible of at least $3,400 for family coverage and $1,700 for self-only coverage. And so that is the 2026 amounts. Also, you have health reimbursement arrangements that are currently for 2025. The limit in an HRA is $2,150. It'll be $2,200 in 2026. Well, you probably know that Congress just recently passed a draft outline of a tax bill. And there were a lot of different proposals in that, and we'll be working through those on MyCPE. That's actually a separate topic for its kind of its own thing. There are a lot of provisions in it. The Tax Cuts and Jobs Act expires at the end of this year, so Congress will have to take some sort of action. If they don't, tax law rolls back to what it was in 2017. But one of the articles that I pulled out just of interest is that President Trump is calling for creating a new 39.6% tax bracket for people whose income is above $2.5 million if unmarried, or $5 million for married filing jointly. Now, will this make it into a bill in Congress? Who knows? There have been some Republicans in Congress who have said that they're against this, but it's something that the president has proposed. And so, lawmakers, they've come up with this outline, but nothing has actually passed. That's one of the difficulties in talking about any proposed legislation, is that until something passes, it's all speculation, like here's what's in the bill, but we don't know how that's actually going to work in the real world, and we don't even know if it'll pass because nothing has passed yet. According to Accounting Today, if this proposal from President Trump were to happen, it would raise $67.3 billion over the next 10 years, according to Accounting Today, based off estimates by the Tax Foundation. So we'll have to see what happens on all of that, but certainly 2025 will be an interesting year for all of us in the tax pro field, because something is going to happen with the Tax Cuts and Jobs Act, or if nothing happens, everything gets rolled back to the way it was in 2017. That'll be interesting too. What's that saying? May you live in interesting times? We certainly do, in a lot of different ways, but especially with taxes, it is interesting times, no doubt. And the IRS recently came out with a multi-year operating plan for its whistleblower office. So the whistleblower office administers claims from whistleblowers who identify taxpayers who may not be complying with the law, the tax law. And so the office director of the IRS whistleblower office, John Hinman, said that they've incorporated feedback from whistleblowers, whistleblower practitioners, IRS bodies, oversight bodies, plus IRS employees to come up with this plan. And they have 6 strategic priorities: enhancing the claim submission process to get greater efficiency, using high-value information effectively, awarding whistleblowers fairly and as soon as possible, keeping whistleblowers informed of the status of their claims and why the IRS made the decision that it made on its claims, safeguard whistleblower and taxpayer information, and ensure that their workforce has effective tools, technology, and other resources. Along with those priorities, they've come up with 38 initiatives, both short-term and long-term, to enhance the program. The IRS Whistleblower Office started in 2007 and has paid out awards of over $1.3 billion and collected more than $7 billion off of that information. Awards to whistleblowers, by the way, generally range from between 15% to 30% of whatever the IRS collects from the information that was provided to it. So those are just a few recent headlines in the tax world for MyCPE Shorts. I'm Jason Dynison. I'm an enrolled agent. You can catch me here at MyCPE on a lot of different programs. MyCPE, by the way, has some 15,000 hours of content. So when we mentioned earlier about, figure out what you need for continuing education so that you can enhance your learning based on the things that you encountered during tax season, I bet MyCPE has some offerings that can help you out. So I'm Jason Dynison. Thanks for listening and watching, and we'll catch you next time on MyCPE Shorts.